To our fellow shareholders, esteemed board of directors and colleagues, good morning. Thank you for joining us today. I hope you and your loved ones are all safe and healthy. Over a year has passed since the COVID-19 pandemic spread throughout the world, causing global health and economic crisis like no other. Cities entered lockdowns, countries experienced second and even third waves of cases as new variants of the virus emerge. The world grappled with the worst economic downturn since the Great Depression. To say that 2020 was tumultuous would be an understatement. We saw a tremendous upheaval in the entire restaurant industry, and our company, Shakey's Pizza Asia Ventures Inc., was not spared. Entering the new decade, our business was on a 16-year double-digit growth streak for both top line and bottom line as a result of our strategies and hard work. Unfortunately, this streak ended in 2020. We started 2020 strong with a double-digit same-store sales growth and an overachievement of our initial revenue and profit targets. We were on track to hit a 17-year streak. However, when the pandemic arrived and the government implemented one of the strictest and longest quarantines beginning March 2020, our business, with dine-in comprising 60% of our sales and mall-based stores at 55% of overall network, was hit hard. Our system-wide sales, which had been growing at a compounded annual growth rate of 12% pre-pandemic, contracted by 36%, landing at 6.6 billion pesos for 2020. Likewise, our net income, which was growing year on year, also dropped. In 2020, we saw a net loss of 254 million instead, the worst in our company's history. But as the saying goes, when the going gets tough, the tough gets going. With strong hearts and minds, we at Shakey's put our full commitment to weathering this crisis and coming out stronger, even better than before. Our goal was to stop the bleeding, bounce back, and bounce up fast while balancing the needs of our stakeholders, our guests, our employees, and the company. We anchored our turnaround plan on 3 pillars: cash conservation and cost restructuring, strategic pivots, and value creation. First, given the uncertainties brought about by the pandemic, we needed to ensure that we had a healthy cash position to navigate through and survive the crisis. We immediately restructured and reorganized. We conserved cash by temporarily halting our expansion and renovation programs. We liquidated our excess inventory and negotiated extended payment terms with suppliers and rent waivers with lessors. We strengthened our discipline in managing expenses and accelerated digitization and automation programs. As the pandemic dragged on, we were forced as a last recourse to adopt the painful process of right-sizing our workforce, a move which many companies in our industry was forced to take as well. We developed a program which we trust was fair and just for employees, working transparently with them, the labor union, and the Department of Labor and Employment. Looking back, when we let go our employees, I believe we did so with empathy and gave extra to cushion the blow. Today, we're in a better position than last year, and we now have a program to rehire or outplace those deserving employees that we have let go. So far, more than 70 have benefited from this program. Second, we also saw the need to swiftly execute strategic pivots and better position the company for long-term growth. Strengthening delivery and off-premise dining was of utmost importance to keep our brand top of mind for our guests. We launched a 31-minute If It's Late, It's Free program in key areas in the metro. To bring this to life, we opened more ghost kitchens and delivery and carry-out stores, proven cost-efficient formats that improve our delivery service and increase our reach inordinately. We strengthened our presence across multiple delivery platforms through our in-house voice and digital platforms and strategic partnerships with aggregators. We also leverage our standalone store formats to create a park and order service for carryout. We pivoted our store expansion plan to maximizing existing assets, designing our new stores to be multi-branded and in smaller store formats. This is aligned with our guests' emerging preference for off-premise dining via delivery and carry-out, rising concerns for safety, and heightened need for convenience. Finally, during this time of crisis, we focus on creating value for our guests. We recognize that after many challenging months, consumers are tightening their belts, and therefore, value for money offerings have become more relevant to them than ever before. In this regard, we leverage our strong brand equity and industry-leading margins to create bundles and promotions and wow our guests with these affordable offerings. As consumers gravitated towards trusted brands in these times of uncertainty, we fortified the Shakey Supercard, our existing loyalty program with over 1 million members. We launched Supercard Gold to provide more benefits and exclusive perks to our guests from all our 3 brands, Shakey's, Peri Peri, and R&B. And of course, last but definitely not the least in value creation, we prioritize the health and safety of our guests and employees. Last year, in record time, we were able to launch our Shakey Secure Atmosphere and Food Execution, or SAFE program. This enabled our guests to know, see, and feel safe with our products and services and gave us the confidence to reopen our stores. We initiated a contactless delivery protocol to better serve our off-premise guests and also redefine the dine-in experience by creating and enhancing al fresco dining areas, allowing our guests to feel safe at Shakey's. And so, we are proud to say that while we were among the first to shut down most of our stores, we were also one of the first to reopen most of our stores in the industry. All in all, through these efforts, we are now on the road to recovery. We are greatly encouraged to see sequential recovery in our system-wide sales compared to pre-pandemic periods in 2019. As of Q1, we were already at 67% sales recovery. We ended 2020 cash flow positive and saw healthy operating cash flow generation in the first quarter of 2021, allowing us to meet our obligations on time and in full. First quarter 2021 was also the second consecutive quarter that saw a positive bottom line, with net income before tax landing at 40 million and net income after tax at 29 million. Despite all the challenges in 2020, we have retained our leadership in the category, even growing our market share among full-service restaurants and full-service pizza chains. We ended 2020 with a net 0 store closures. For 2021, we are happy to report that we are continuing on with our expansion plans. We are targeting to open 30 new stores this year, 15 Shakey's and 15 Peri Peri. And we are on track to meet this target, as we have already opened 11 new stores net as of end May 2021. We have also continued to innovate and beef up our menu with healthier and better for you options, making waves with our plant-based menu offerings through a strategic partnership with Unmeat. Moving forward, expect to see more of this from Shakey's as we endeavor to serve our guests with healthier products. We remain resolute in fulfilling our vision of having a portfolio of strong brands in our company. As a testament to that, even while in the midst of a pandemic, we added R&B milk tea, one of Singapore's leading brands in the category, to our brand portfolio. To date, we have rolled out the brand to 133 Shakeys and Peri Peri outlets, and we are leveraging our extensive delivery platform, allowing R&D to gain traction and exceed expectations in this space. Our road to recovery was not an easy path to take, and I would like to applaud the relentless men and women behind this turnaround effort. First and foremost, I would like to thank our frontliners, our service and delivery crew who have adapted to the strictest personal health and safety protocols to serve and wow our guests amidst these challenging times. I would like to honor the Shakey's management team for being on the ground day in and day out, fully dedicated to turning the business around, and to our commissary for their commitment in keeping the plant going amidst all logistical and operational challenges. My gratitude also goes out to our franchisees for their unending resilience and their continued support and faith in the company, working hand in hand with our representatives to continuously wow our Shakey's guests despite the challenges they are enduring. I would like to thank our esteemed board of directors for their counsel, guidance, and continued support through these difficult times. And of course, I extend my heartfelt gratitude to our guests who have been with us through thick and thin and for their continued loyalty to our brands. Guest centricity is at the core of what we do in Shakey's, and only through their continued patronage can we fulfill our mission. Finally, we thank you, our shareholders, for your utmost faith and support for the company as we weather through the challenges and gear up for those that are yet to come. Trust that we remain consistently prudent in managing our resources. With this, but still cognizant of the continued strong recovery we had the past quarters, we'd like to announce that we will be gladly recommending to the Board of Directors a dividend of 2 centavos per share. This amount is double of last year's and reflects our swift progress amidst the challenges we have faced in 2020. This year, we look ahead with cautious optimism, grounded by the lessons learned from 2020, yet encouraged by the numerous opportunities. We look forward to rolling out our company-wide vaccination program through our affiliate company, Century Pacific Food Incorporated. This is a much-needed program to protect our employees and guests, given our service-oriented business. We are also pleased to announce the entry of a strategic investor in our company, JE Holdings, through a primary share issuance. JE is the private investment group of the Gokong Wei family, one of the most prominent family conglomerates in the Philippines. The infusion comes at a good time. We are seeing sequential recovery, healthy operating cash flows, and a strong balance sheet. This capital infusion gives us additional financial flexibility, strengthening our war chest to pursue organic and inorganic growth opportunities. We take this investment as a sign of confidence for our business, our brands, and our SPAVI team. With the Gokong Wei's group's diverse set of business interests, we look forward to creating multiple synergies that will benefit both our companies moving forward. We warmly welcome JE Holdings, and we are grateful for their trust and confidence in our brand, in our company, in our team. As we progress in 2021, we will continue to be guided by our WOW philosophy and culture, a way of thinking and being that has allowed us to flourish and thrive in good times and survive in challenging ones. Rest assured that we will continue to care for your capital with integrity and responsibility. On behalf of the men and women of Shakey's, Peri Peri, and R&B, thank you, and we look forward to seeing you in our stores soon. God bless.